So you are a different trader who loves fast-paced trading, quick in and out, also known as scalping. This video is for you. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos as we upload. So basically this is the strategy in full, but you need to see how we'll illustrate it on real markets. So the EMAs that we are going to need are the 13, 50, and 200 EMA. All those exponential moving averages are applied to close. So the illustration is the first thing that we need to see is 5200 EMA crossover, right? As we have said, this is a scalping and EMA crossover scalping strategy. So 5200 EMA crossover. Then the next thing is to see price touch the 200 EMA. In some cases, the price will actually come to touch the 200 EMA or pierce through a little bit and then start to continue. So the entry trigger is now the third part is now to see 1350 EMA crossover occurring. So basically these three things are what we are going to be using. So basically we'll need to apply all this on the M5 time frame, and we can as well apply it on high volatile pairs like US oil, US 30, US 100, or even gold. So let's now go over the charts to see how everything is done. So this is US oil. The first step that we have defined on the charts is actually to see a crossover of the 50 200 EMA. We can see this crossover. My 50 is the one in light blue, my 200 is the one in white. If we see a crossover like this, we know that we are now in an upward market bias, right? So we are now only looking for buys, but these buys are done after the market gives us or retest the best line, which is the 200 EMA. The market gave us a crossover, it went up and came back to the 200 EMA. Our entry trigger is when we see a 1350 EMA cross occurring and the market went our way. All this is done on the M5 time frame and the market went our way like that, right? Let's zoom in to see. In this case, we had another crossover of the 50 200 EMA at this point. So we can as well take several entries. We can see that a touch was issued, a crossover was issued, entry buy. Another touch was issued, crossover was issued, entry buy, like that. And then the bias changed. When the bias changed, we saw a crossover of the 50 and 200 EMA. The market went down, came back to the 200, and a crossover of the 50-13 was issued sell, right? And we sold the market. Another touch of the best line, the 200 EMA, was issued, and then crossover was issued. Another sell was taken, like that. Whenever we see a touch of the best line, we still whilst we still have one directional bias from the previous 250 200 EMA cross, we can take those entries without fear. In this case, we probably were going to be taken out because we can see the market giving us a retest of the best line, a crossover, but the downward move was not enough for us to stay long in the markets. It all now depends on your scalping scalping criteria. Another crossover was issued at this point. We were now waiting to see. Unfortunately, the market came and pierced through, right? We've said sometimes the market pierced through, but what governs us is the 50-13 EMA like this to buy. In this case, we bought and we were out. Another point, we have made another change in bias, and then the market came back to retest the 200, and then after retest of the 200, 50-13 EMA made a crossover and a sell was issued. In this case, the market came back as well to the 200 EMA, and later we can see a 1350 being issued for another sell, right? We are looking for the retest. Another retest was issued to the 200, and a 1350 EMA was issued for another sell like that. We can change as well to normal pairs like Euro CHF. I'm going to just remove all unnecessary indicators. So here we can see a bias being issued 50 200 EMA being given. From that 50 200 EMA, we can now see we had a retest of the 200. Probably we are going to lose this trade, but we are going to recover on this particular trading entry. Going back as well to actually get more data, we can see the market giving us a 5200 EMA, touch of the baseline, crossover of the 50, and the market went our way. Touch of the baseline, crossover of the 1350, and the market went our way like that. Touch of the baseline, crossover of the 50, touch of the baseline, crossover of the 1350, and the market went our way. So basically we are trying to find bias by 50 200 EMA cross, and then touching of the 200 EMA. After touching of the 200 EMA, we need a 1350 EMA crossover to make our entry. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and see you on the next one.